Now, Bitcoin and cryptocurrencies are two words that have become very popular recently. Because of them, people are becoming millionaires overnight, and it's created quite a rush from panicked investors who are desperate not to miss out.
And digital currencies are a global phenomenon, but most people can't explain what they are. So it got us wondering, is the risk really worth the reward? Helping us to explain this morning is Ian Balina, a cryptocurrency investor and advisor, as well as Chris Bryke from Stockpot. Gentlemen.
Yeah, help us explain. So, let's start with that, Ian. Then you're the investor here. Can you explain it simply for us what it is, what cryptocurrencies are?
So cryptocurrencies are basically just digital currency, digital forms of sending money, sending value from one person to a different person without having a third party involved.
So, I mean, this seems to be something that could well be the way of the future.
Oh, it is.
You reckon it is? So why do you think it is?
I mean, so the technology is the biggest disruption since the internet itself, right? Being able to send money between me and you without having a PayPal, a bank, a government in between, and still having trust. So that's why these currencies have value.
Okay.
Well, that actually brings up an interesting point about value, and I might drag you in on this one, Chris, if I may, because, I mean, with a national currency like the Australian dollar, you can look at what the market's doing. It gives you a sense of where the dollar might go. For instance, when Venezuela starts printing a lot of new money, you know, the value of it's about to plummet. How do you work out what this is worth?
Well, Bitcoin is not only a money, it's a money and a technology. So I suppose you're not only valuing the value of the utility of the currency, but also the value of the currency to store value and the ability to use it as a technology to transfer money. And I think with any new technology, it's just notoriously difficult to value them. And people tend to get very excited about technology when it first comes out. Ian mentioned the original sort of tech boom, and the tech boom was one of the first sort of exciting big busts of technology. But a lot of people got too excited too early, and companies like Amazon, for instance, which is obviously a brilliant company that's doing very well now, its share price still fell 95% after the tech boom. So people tend to get a bit too excited about technology when it comes out, and that's why it doesn't mean it's necessarily the right place to invest.
Because you just had the Winklevoss brothers who were involved with Facebook. Yeah. I mean, they invested heavily in Bitcoin and made a lot of money from it. But last week or the week before, when the value of it plummeted, they're no longer billionaires.
Well, that's right. I think if you have a look at the history of booms and busts, they all seem to follow a pretty similar pattern, which is that there's always a small group of people usually who are early adopters. They get in early, they get in ahead of everyone, they have a bit of foresight, and they make a hell of a lot of money. But then those people become quite famous. They get on TV, people start talking about them at Christmas lunches, and then everyone, as Peter mentioned, feels FOMO. They feel like they're missing out, and they want to get involved. And when it comes to investing, FOMO is the most dangerous time to invest.
Okay, so that leads us quite nicely to what happened this week, Ian, because there was a bloodbath on the market. So you've got, there was $200 billion or so, the value of Bitcoin and cryptocurrencies is wiped off the market. Bitcoin was slashed by half. Is that an evidence of the bubble bursting?
I don't think so, right? Because you have to put things in perspective, right? In basically 2 months, the total cryptocurrency market cap went from 150 billion to 800 billion, right? So this is just simply a healthy correction, a healthy pullback. Right? So if you put things in perspective, we still went from 150 to 600 or 500 billion or so. That's still a good ROI for an investor.
So just to give the people at home an idea of how well you've done, how much did you start with?
Initially, I put in $200 in cryptocurrencies.
So you started with $200.
You then kept on adding more with each confidence-boosting trade I had, each investment. Then total now, I put in about 90 grand in cryptocurrencies, and it's turned to about $4 million.
So you've basically gone from $200 to $4 million. I mean, that's not bad, right?
In 1 year.
That's not bad.
It's okay.
Yeah.
It's okay.
I mean, so is this...
But if you're coming in now, though, you're not going to make that same kind of money,
I still think
are
so.
you?
I still think so, because right now, cryptocurrencies are basically going mainstream. There's so much value involved, and the ICOs, the brand new coins, their valuation is so undervalued, right? To a point where there's lots of growth very, very fast.
Well, what advice would you give, Chris? I mean, if someone was thinking about this, would you suggest avoid it altogether now? Maybe invest in like a basket of them, or because there's a whole bunch of them, or would you just kind of just pick one and go with it?
Well, ultimately, I think the issue is that, yeah, there are a lot of people like Ian who have made a lot of money, and that's fabulous, but people look up to them and all expect that they can do the same thing. And I think the nature of booms and busts is that it's very difficult for the average person to make money after the fact. And it's very much after the fact now. And sure, these digital currencies might be successful in the future, but that doesn't necessarily mean they'll go up in value in a straight line. So there could be big falls along the way. Already, Bitcoin, as you mentioned, had a fall last week. It's had 9 falls of more than 30% over the last few years, and 2 falls of more than 80%. So,
but then it responds just as well.
Yeah, you're absolutely right. So I think for anyone looking to invest, you've got to invest a sensible amount of money where you're prepared to wait for a very long period of time if it does fall, and an amount of money that's not going to have impact on your family if it does fall, because you might be waiting years.
I'm kind of the view that if you don't get it, don't invest in it.
Maybe, would you say stick to the share market or property, or you know, if you had a bit of money left aside, would you say give it a go?
Well, it's Warren Buffett's most famous saying is actually, if you don't understand it, don't invest in it. And actually, that's my philosophy.
I thought that was mine.
Well, maybe
I heard it somewhere.
Maybe he borrowed it from you. So that's our philosophy. I mean, we tell our clients at StockSpot that they don't really need to be betting on Bitcoin to make money long term. Actually, the most sensible and smart way over the long run is just to invest in a diversified portfolio of shares.
Well, Ian, you're out here at the moment. You're someone who's obviously done well. You're speaking with prospective investors. There's an Australian company that you're looking at here called Power Ledger, right?
Yes, I am, yeah.
And so would Power Ledger, first of all, you might have to explain what they are, and is that, you know, something that you would suggest investors get behind, or are there other cryptocurrencies that is your tip?
Yeah, I mean, so Power is why I'm here actually in Australia, right? I was an early investor in their ICO, and they're basically an IPO for cryptocurrency, and they've done a 2,000% gain in about 4 or 5 months. And I told my audience if they had a 20x return, I'll come here to Australia, and here I am. Right? Now, in terms of other projects out there, I would say only invest what you're willing to lose, but there are many spaces that have value, right? So for example, store of value like Bitcoin, I would say brand new blockchains like Ethereum, Neo. I would say predefined use cases that already have success. For example, privacy coins like Monero, and also banking, brand new coins like Ripple and OneChain.
Now, look,